Hey Smarter Vets, welcome back to another Frequently Asked Question Friday, where we take your questions from our clients, from people in the veterinary community, and spend some time to really provide some more detail and some clarity around those different ideas and pieces of information that people want to know more about. I'm Tom Seco, one of the co-founders of Florida Veterinary Advisors and a co-host of the Smarter Vet Financial Podcast. And today, what we're going to concentrate our energy or our attention on is, I'm a relief veterinarian. How should I be paying myself? And there's so much to this question that really needs to be unpacked from this conversation today. And it really boils down to, taxes, I would say, is the biggest part of it. And then, of course, there are things from a legal perspective of how your business is set up. However, let's define the different categories or different ways you can be from a business of how you can go about setting up and structuring things. So the first thing is around what we call a sole proprietor. And anyone can be a sole proprietor. You can start your own business accounts. You can create your own doing business as and begin to start collecting payments. And then when you file your taxes at the end of the year, all of your income that you make will get put onto your personal tax return. And then all of those earnings that you make are subject to what they call FICA and federal income tax, and in some instances, state income tax, depending on where you live. So those can all lead to a bunch of extra dollars that you're having to pay, unless that's what you purposefully were trying to accomplish. So being a sole proprietor, at times there are certain flexibilities that when you are receiving 1099s, and you can file different schedules on your tax return to deduct certain expenses and have ways to reduce your taxes. However, when you are a relief veterinarian, you might not have a lot of options to do that. So one of the best ways that you can go about doing this, and you want to make sure you consult with one of your tax professionals, mostly an accountant who's going to help with the filing of your tax returns every year, is looking at creating a particular business entity. It could be what we call an S corporation, or you could be an LLC that is taxed as an S corporation. So basically what happens is that all of the profits that you earn are now getting put onto your personal tax return. And you have the option to pay yourself in different ways. So the first way is you could pay yourself a wage or a salary, which we call like a W-2, which is subject to federal income tax, potentially state income tax, and FICA. So FICA is Medicare and Social Security. So when you pay into Social Security, it helps at the end of the road of your career is when you can file and now start receiving a Social Security income check. So depending on how much you pay in there and how long you've worked is really what's going to determine that. But then Medicare at the age of 65. So based off of you being a veterinarian, there is what we call a reasonable wage that based off of the duties and the responsibilities that you have that you can pay. So this is a huge gray area. Of course, you want to consult with your tax professional on what is that gray area. So of course, if you're a veterinarian, you don't want to pay yourself like $20,000 a year in a wage because that can be questioned. And at the end of the day, if you ever the IRS looks at it and they're like, okay, you're a veterinarian and you're only paying yourself so much, they could come back and now want to audit you. And then you have to pay back taxes and penalties and everything else. So you got to make sure you understand that perspective of it. And there is, you can give or take depending on what your overall goal is. And then there is also, when you're an S corporation, you can take what they call business distributions or K1. So if you take all of that money throughout the year, every single month, if you take it per quarter or take it at the end of the year, all of that income will then be taxed at a federal income tax and potentially state if that's where you live. Thankfully, in the state of Florida, we have no state income taxes, which is phenomenal. However, all of those distributions, if you leave them in the business, if you put them in your personal account, they're all going to be taxed anyway because they're going to go from your profits of your business that you've set up to now getting dumped on your personal tax return. So that balance or that separation that you create between the two of them really is going to help be able to determine is there a way to be able to reduce some of your obligation, but then all stay within the realm of the IRS not wanting to come back and question you. So when you do set up yourself as an S corporation, LLC, of course you want to make sure you talk to your tax preparer because they're the ones that are going to really determine what would be the best course of action for you. And the crazy thing about this is that an S corp is what they call a pass-through entity. And that pass-through entity, every piece of income, as we talked about a moment ago, gets put onto your personal return. So if you leave it in the business or you take it personally, it doesn't matter. It's not going to be taxed again. Of course, you want to pay very close attention to how much money you're keeping in the business to be able to use for personal expenses, because that can get really sticky when you start commingling personal and business for tax deduction type purposes. So when you take money from the business and you put it in your personal, and granted, let's say you're a relief and you're a relief that has just you can still operate that way because you are theoretically a business. You are a veterinarian, but you have your own business. And let's say at one time you do step up to where you want to have your own practice. Now you have a whole other element you're dealing with because there's a higher level of profitability that business is potentially making. And it could put you in a predicament where you are leaving excessive amounts of money in that business and not doing anything with it. So when it comes to paying yourself, the best thing you need to get on the schedule with is make sure you find a reasonable wage that you're paying yourself as a veterinarian, and then make sure to take distributions, either monthly, quarterly, annually. I honestly think it's best to take them per month because now you're getting a consistent flow to you. However, if you need to keep money in the business for business related expenses, of course you want to make sure you leave that in the business and then take it later, which maybe a quarterly schedule might be better for you. So always keep that in mind. And if you have any other questions or there's other things that you want us to talk about or give more clarity around, make sure to visit our website and fill out our contact us form. And we'll do our best to put this into circulation and provide some more clarity to your questions. And if you're also looking for some other great resources, go check out the Smarter Vet Financial podcast, where we touch on a lot of other different subjects. But for now, wishing you a lifetime of financial success, and I hope you have a great rest of your day.